各位投资界及媒体的朋友们，大家午安！
我是台积电企业讯息处的孙佑文，欢迎您今天来参加我们2019年第3季的法人说明会。由于本法说会是向全球投资人同时连线转播，所以我们全程会使用英文，请您见谅。Welcome to TSMC's third quarter 2019 earnings conference and conference call. This is Elizabeth Sun, TSMC's Senior Director of Corporate Communications and your host for today. Today's event is webcast live through TSMC's website at www.tsmc.com. If you are joining us through the conference call, your dial-in lines are in listen-only mode. As this conference is being viewed by investors around the world, we will conduct this event in English only. The format for today's event will be as follows. First, TSMC's Vice President and Chief Financial Officer, Mr. Wendell Huang, will summarize our operations in the third quarter 2019, followed by the guidance for the fourth quarter. Afterwards, Mr. Huang and TSMC CEO, Dr. C.C. Wei, will jointly provide company's key messages. Then we will open both the floor and the line for the Q&A. For those participants on the call, if you do not yet have a copy of the press release, you may download it from TSMC's website at www.tsmc.com. Please also download the summary slides in relation to today's earnings conference presentation. As usual, I would like to remind everybody that today's discussions may contain forward-looking statements that are subject to significant risks and uncertainties, which could cause the actual results to differ materially from those contained in the forward-looking statements. So please refer to the safe harbor notice that appears on our press release. And now I would like to turn the microphone to TSMC CFO, Mr. Wendell Huang, for the summary of operations and current quarter guidance.
Thank you, Elizabeth. Good afternoon, everyone, and thank you for joining us today. My presentation will start with the financial highlights for the third quarter, followed by the guidance for the current quarter. Third quarter revenue increased 21.6% quarter over quarter to 293 billion NT, driven by new product launches, both in premium smartphone and high-performance computing applications, using TSMC's industry-leading 7-nanometer technology. Gross margin increased by 4.6 percentage points sequentially to 47.6% mainly due to a solid improvement in capacity utilization. Total operating expenses accounted for 10.7% of net revenue, compared to 11.2% in the second quarter due to better operating leverage. Operating margin increased by 5.1 percentage points sequentially to 36.8%. Overall, our third quarter EPS was 3.9 NT, and ROE was 25.7%. Now let's take a look at revenue by technology. 7-nanometer technology saw very strong demand and accounted for 27% of wafer revenue in the third quarter. 10-nanometer was 2%, and 16-nanometer was 22%. Advanced technologies, which are defined as 16-nanometer and below, accounted for 51% of wafer revenue, up from 47% in the second quarter. Now let's take a look at revenue contribution by platform. All four of our growth platforms saw demand increases in the third quarter. Smartphone increased 33% quarter over quarter to account for 49% of our third quarter revenue. HPC increased 10% to account for 29%. IoT increased 35% to account for 9%, and automotive increased 20% to account for 4%. Moving on to the balance sheet. We ended the third quarter with cash and marketable securities of 585 billion NT, a decrease of 180 billion NT from the second quarter, mainly as we distributed 207 billion NT of cash dividends for 2018. On the liability side, current liabilities decreased by 127 billion NT quarter over quarter as we distributed 2018 cash dividend and accrued another 65 billion NT or 2.5 NT per share for the second quarter 2019 cash dividend. And that will be paid in January of next year. On financial ratios, accounts receivables turnover days decreased 1 day to 41 days. Days of inventory decreased 11 days to 65 days, reflecting higher wafer shipments during the quarter. Now, let me make a few comments on cash flow and Capex. During the third quarter, we generated about 142 billion NT of cash from operations, spent 98 billion NT in capital expenditures, and distributed 207 billion NT of cash dividend. As a result, our overall cash balance decreased by 197 billion NT to 452 billion NT at the end of the quarter. In US dollar terms, our third quarter capital expenditures was $3.14 billion. I have finished my financial summary. Now let's turn to fourth quarter guidance. Based on the current business outlook, we expect our fourth quarter revenue to be between 10.2 and 10.3 billion US dollars, which is a 9% sequential increase at the midpoint. Based on the exchange rate assumption of $1 to 30.6 NT, gross margin is expected to be between 48 and 50%. Operating margin is expected to be between 37 and 39%. This concludes my financial presentation. Let me follow by making a few comments about 2019 capital expenditures and TSMC's long-term financial objectives. I will first talk about our capital budget for this year. In TSMC, we build capacity according to our customers' demand. To forecast such demand, we take into consideration not only from each individual customer's indication, but also our own forecast based on macro as well as market segment outlook. Given the stronger outlook for 5G deployment next year, the demand for our 7 nanometer and 5 nanometer has increased significantly in the last few months. We have therefore decided to raise our full year 2019 Capex by $4 billion to meet this increased demand. We now expect our 2019 Capex to be between 14 and 15 billion US. About 1.5 billion US of the $4 billion Capex increase is for 7 nanometer capacity, and $2.5 billion is for 5 nanometer capacity. Although we're not able to give you a formal guidance for our next year's Capex until next January, we currently plan next year's Capex to be somewhat similar to our revised 2019 Capex. Now let me state our long-term financial objectives. As the company's new CFO, I'm happy to tell you that TSMC's long-term financial objectives remain the same. Our goal is to achieve revenue and net income CAGR in the next few years to be between 5 and 10% in US dollar terms. Gross margin to be about 50%, operating margin to be about 39%, and ROE to be above 20%. Regarding our cash dividend policy, we reiterate that we will distribute about 70% of free cash flow as cash dividend. More importantly, TSMC is committed to a sustainable cash dividends on both an annual and quarterly basis. Now I will turn the microphone to CC.
Thank you, Wendell. Good afternoon, ladies and gentlemen. Let me start with our near-term demand and inventory. We conclude our third quarter, just reported by CFO, with revenue of NT 293 billion, or US 9.4 billion. That is slightly above our guidance due to better demand from smartphone-related applications than our forecast 3 months ago. Moving into fourth quarter this year, we expect demand from both smartphone and high-performance computing related applications will continue to increase thanks to our industry-leading 7 nanometer technology that powers these applications. On the inventory front, our fabless customers' overall inventory is being gradually digested throughout the third quarter. We now expect it reduced to a few days above seasonal level exiting third quarter and approach seasonal level by the end of this year. For the full year of 2019, we forecast both the overall semiconductor market, excluding memory, and the foundry segment to decline by a low single digit from their 2018 level. However, we continue to expect TSMC to do better and achieve a slight annual growth. Now let me talk about the progress and development of 5G. 5G will drive AI applications and bring many benefits to the market. Performance will be greatly improved with data transmission speed up to 10 times faster as compared to 4G network. In addition, 5G latency will have about a 90% reduction as compared to 4G, allowing for real-time response and control. The benefit from 5G will unlock new usage cases such as AR, VR, real-time translation, and high-quality gaming, to name a few. We believe smartphone OEMs will come up with many more innovative applications to take advantage of the 5G infrastructure. Since the middle of this year, we have been seeing an acceleration in the worldwide 5G development. This will speed up the introduction and deployment of 5G network and smartphone in several major markets around the world, which leads to the increase of our Capex for this year. We expect a faster ramp of 5G smartphones as compared to 4G, with the penetration rate of 5G smartphones to reach mid-teens percentage of the total smartphone market in 2020. Meanwhile, we expect the silicon content of 5G smartphones will be substantially higher than that of 4G smartphones. That is due to increasing functionalities and additional ICs for more camera, RF circuit, modem, power management IC, etc. Power efficiency, speed, and ability to incorporate additional functionality are critically important to 5G smartphones, which require TSMC's leading-edge technology and will continue to fuel our growth for the next several years. Now I will talk about our N5 and N3 status. Our N5 technology has already entered risk production with good yield. N5 will adopt EUV extensively and is well on track for volume production in the first half of next year. With 80% logic density gain and about 20% speed gain compared with the 7 nanometer, our N5 technology is a true full node straight from our N7. We believe it will be the foundry industry's most advanced solution with the best density, performance, and power until our 3 nanometer arrives. With N5, we are further expanding our customer product portfolio and increasing our addressable market. The initial ramp will be driven by both mobile and HPC applications. We are confident that 5 nanometer will have a strong ramp and be a large and long-lasting node for TSMC. Now I will talk about N3. We are working with customers on N3 and the technology development progress is going well. Our N3 will be another full node from our N5 with PPA gains similar to the gain from N7 to N5. We expect our 3 nanometer technology will be the most advanced foundry technology in both PPA and transistor technology when it is introduced. Now I will talk about the ramp up of N7, N7 Plus, and the status of N6. Today we are completing our second year ramp of N7. We continue to see very strong demand across a wide spectrum of products for mobile, HPC, and IoT applications. Our N7 Plus is the industry's first commercially available EUV lithography technology. N7 Plus provides 15% to 20% higher density with improved power consumption when compared to N7. Then it's already in high volume production with yield similar to N7. We expect the strong demand for N7 Plus continue into next year and are increasing Capex to meet this demand for multiple customers. Now N6. Our N6 provides a clear migration path for the second wave N7 products as its design rules are 100% compatible with N7, while providing 18% logic density gain with performance to cost advantage. N6 uses one more EUV layer than N7 Plus. N6 risk production is scheduled to begin in first quarter next year, with volume production starting before the end of 2020. We reaffirm that 7 nanometer will contribute more than 25% of our wafer revenue in 2019, and we expect even higher percentage in 2020 due to worldwide development of 5G accelerates while demand from HPC, mobile, and other applications continue to grow. Finally, I'll talk about TSMC's advanced packaging business. Our advanced packaging solutions enable system integration with wafer-level process, allowing seamless integration of front-end wafer process and back-end chip packaging. The solution consists of CoWoS, info, system on integrated chips, or SOIC, and wafer-on-wafer, or WOW. We are seeing strong momentum for CoWoS and info for HPC applications as we continue to enlarge the integrated chip area to above 2 radical size in one module. We are also working with a few leading customers on SOIC, which is an industry-leading 3D IC packaging solution. SOIC enables 3D integration of multiple chips in close proximity to deliver the best possible performance, power, and form factor. We target to start production in 2021 timeframe with early adoption by HPC applications. As the industry continues to seek innovation to enhance system-level performance, TSMC's differentiating advanced packaging solution will allow us to grow the business at a pace faster than corporate in the next few years. And thank you for your attention.
This concludes our prepared statements. Before we begin the Q&A session, I would like to remind everybody to limit your questions to 2 at a time to allow all participants an opportunity to ask their questions. Questions will be taken both from the floor and from the call. Should you wish to raise your questions in Chinese, I will translate it to English before our management answers your question. For those of you on the call, if you would like to ask a question, please press the star, then 1 on your telephone keypad now. Questions will be taken in the order in which they were received. If at any time you would like to remove yourself from the questioning queue, please press the pound or the hash key. Now we begin. First, we will have questions coming from Credit Suisse, Randy Abrams.
Thank you. Good results and outlook. I wanted to ask the first question, given the high Capex for this year and next year, if you could talk about the capital requirements for 5 nanometer and EUV, maybe how the equation with EUV coming in, how does that affect the capital intensity or say the Capex per 1,000 wafers? And how do you see this node in terms of pricing and maintaining the same level of profitability on prior nodes?
Okay, so Randy, you're asking about the how much EUV accounts for the capital expenditures.
How EUV changes your capital intensity or Capex per K. If you're getting some benefits, that it's actually lowering that. But given the Capex, is it still the same? You're seeing the higher Capex per K. And then how is that translating to profitability? How you expect 5 to compare to, say, some of the prior nodes?
Cannot talk too much about details, but definitely Capex per K for 5 is certainly higher than previous nodes. However, if we combined everything together, as we stated at the beginning, we're still seeing our structural profitability remains the same.
Okay, and I'll ask one follow-up to that and then a second question. I guess this year, like second half strong demand, leading edge tight, the gross margin guidance for fourth quarter is still, it's a good margin, but it's 48 to 50, and I think the target's to hit 50. So maybe if there's still a little bit of drag on the margin, and with next year bringing in a new node 5, if you think we can get to that 50 for next year. That's just a follow-up. And then.
Okay. For the fourth quarter, it's just like we stated all along for our structural profitability. When we reach 90% of utilization, we target to reach 50% of gross margins. For next year, it's still early to say, but structural profitability or margins may be affected by the ramp of 5 nanometer, as at the beginning of ramping of every the technology nodes, it will somehow be affected. However, if the utilization is good, then we're still expecting to see the structural profitability continues.
Okay, the second question I wanted to ask, because you had a strong third quarter recovery, guiding another good fourth quarter, as you look to maybe an early look at next year, how should we think about seasonality? There's some concerns before 5G ramps, we have a correction on 4G, and then we have, if the tariffs hit, we might have had some pre-build. So how do you see kind of early year risk of, say, a correction? And can you pull in some demand, say if capacity is tight, to maybe mitigate the magnitude of correction early in the year?
You are talking about the seasonality of the smartphone that we observe almost every year. And so I don't expect next year to be dramatically different. However, we did see some of the 5G smartphones, the growth momentum is higher than we expected. So I would expect next year's seasonality is not so strong as we observe for this year. But it's too early to say, of course, because of the market is very dynamic.
Thank you.
Next question will be coming from JP Morgan's Gokul Harihana.
Thanks for taking my question. So first of all, if you look at the history, whenever TSMC has had a step up in Capex, that is typically accompanied by a step up in growth as well. So just wanted to kind of narrow down a little bit on the 5 to 10% growth, which is still kind of the kind of growth that we were expecting when we were spending 10 to 11 billion. So could you give a little bit more details or maybe narrow down that forecast a little bit more for us? Because if we say a 14 to 15 billion range of Capex, that's closer to the high 30s or 40% Capex intensity, higher than our previous range.
Gokul, let me answer the question carefully. Let's say that TSMC always build a capacity, working closely with the customer and to meet their demand. That's number one. Okay. We discuss with the customer on their demand, we make our judgment also. Now, we are increasing the Capex quite a lot, no doubt about it. But then, that's due to some of the reason I can foresee for the future. First, the 5G's ramp up is much faster than 4G as we expected. Second, TSMC actually is expanding our customer portfolio. And in the same time, we also expanding our product portfolio. And so put all the factors together, we have a good reason that we increase our Capex this year and probably next year.
Okay, so that basically suggests that 5 to 10% is not the growth for the next couple of years. But maybe just given the higher growth in 5G and accelerated build out, could you talk a little bit about going into next year? Do you expect 5G and smartphone to be the main growth driver? Or do you feel that HPC momentum is going to be even faster than smartphone, given that some of your customers are starting to take a lot of market share?
To answer your question, actually it's both. We expect the smartphone to grow faster than, I mean that not in terms of unit, but in terms of silicon content. And the HPC also grow, as I said, we expanding our product portfolio and also our customer portfolio. So the addressable market is increased. That's all.
Okay. So just a follow-up question. I think at the beginning of the year, we had a more conservative view on 5 nanometer build-out. Obviously, that view has changed. So just to calibrate, should we expect now that 5 nanometer revenues next year are likely to be higher than, let's say, 7 nanometer last year, first year of ramp of 7 nanometer?
I don't want to say exactly what is the percentage, but let me say that now we have more optimistic than 6 months ago. 6 months ago, I believe what I said is that we will be very careful and a little bit conservative in building the 5 nanometers of capacity. Now we change to be more aggressive on the 5 nanometers of capacity build up because we, as I said, we work closely with customers and in both all the applications like a smartphone, HPC, even IoT and automotive.
Okay, thank you.
Next question will be coming from UBS, Bill Lu.
Thank you. First of all, Mr. Huang, congrats on the new post and looking forward to working with you. Going back to Capex, given the big increase, can you give us some guidance for modeling depreciation?
Depreciation for this year will be flattish compared with last year because a big chunk of the increase happens in the fourth quarter. As to depreciation in next year, based on what I just indicated about our capital expenditures for next year, it will be higher. However, the detailed number or more specifics, we plan to discuss it in January next year.
So if I look at when the new capacity is going to come online, is it mostly, say, Q2, Q3? Is that the right way to think about it?
Well, if you look at the tools lead time, your estimate is very good, Q2, Q3 time.
Okay, great, thank you. Dr. Wei, for 7 nanometers, obviously demand looks quite good. Can you give us some guidance for 7 nano as a percentage of revenues by end of next year?
Higher than this year.
Okay, thank you.
Next question will be coming from Citigroup's Roland Xu.
Good afternoon. Thanks congrats for the very good result in 3Q. And I think the first question is you talk about next year for 5G smartphone will be the key growth driver. So and also you talk about not only because of unit growth but also for this semiconductor content increase. So do you have the number for the in dollar content per 5G smartphone compared to your 4G?
Let the CFO to answer this.
The answer is we don't have the number.
But if you compare to the 4G, where does the increase come from? Is it because from this bigger die size or because of more semiconductor seeker? Or I think that you probably have an assessment on that, right?
We do have some assessment, to be frank with you, because we know the die size, we know that the number of the chips inside. I give you some of the feeling. We are using the more advanced technology, so the die size increase on the leading edge is not so much, but it did increase because of more functionality. You can expect the people put the AI application inside or those kind of things. More important, as last time, I believe I already mentioned that camera for one example. Now you can see more and more camera in smartphone, especially the high-end smartphone. And also the more resolution, the other one was silicon real estate from 20 megapixel to 40 megapixel. So more camera, higher resolution, more pixel. And then also you need a lot of power management IC to control the power consumption, because of 5G, they consume a lot of power. So your power management IC has to be more advanced. So you put a more power management IC inside. And then you are talking about the more channel in the communication. So the RF front end, the transceiver, everything, you are, not only the die size will increase actually to adopt the more channel. So it's even move into the higher leading edge technology also.
Thanks. So I guess for the high-end phone, probably the dollar content will increase more, right? So for your the total 5G smartphone, you need forecast to be about mid-teens of the total shipment. So do you have this 5G smartphone breakdown by high-end, mid-end, low-end?
We'll talk about it in January.
Okay, thank you. My second question is that now we are ramping up N7 Plus fastly. So is the N7 Plus gross margin going to be very different from N7 we are enjoying now?
It's very close.
Okay, thank you. And how about for N7 Plus? Is it going to take 7 to 8 quarters to to bring up the gross margin to corporate average?
We look at the 7 Plus, and 10 as the big nodes. So from that point of view, N7 nodes actually has reached corporate margins.
Okay, thank you. I think just a follow-up. I know you don't comment on the ASP, but for the same amount of the wafer shipment on N7 Plus, is it going to contribute more revenue upside to TSMC?
You just mentioned we don't.
No, I talk about revenue. I don't talk about ASP.
The same thing.
Okay, thank you.
Next question will be coming from CLSA's Sebastian Ho.
Thank you. My first question is I want to ask about the Capex intensity. So with the hike in this year Capex, so apparently we can do the math that this Capex to sales will go up to shoot over 40% this year. So how do you see this trend into 2020? And then is there any updated guidance on the Capex intensity going forward versus prior guidance?
Yeah, as you just mentioned, you can calculate the Capex intensity this year will be over 40%. At the same time, as we indicated that next year's Capex, although preliminary, is about the same level as this year, and we also see strong demand for our business next year. Our Capex intensity will be lower next year. And from what we can see at this moment, it will then gradually come down to probably between 30 or 35% level going in after next year.
So we're not seeing fall into 30 to 35% range in 2020 yet?
In a couple of years after 2020.
But could potentially next year. It's just that you don't want to talk about that right now.
Right, the potential of capital intensity, you mean?
Lower to mid-30s by 2020. Or
It's lower than 40%.
Okay, thank you. The second question is on the gross profit margin. I recall that a couple quarters or 2 quarters ago in the first half this year when TSMC pounded the table saying that we are past the bottom, we're seeing the strong rebound in second half this year, and also expect the gross margin will go back to 50% level second half. And indeed, now we see the utilization rate coming back, revenue coming back in second half as expected. But it looks like the gross margin is lagging a little bit compared to compared to the revenue direction. So can you explain what's this factors that driving gross margin recovery behind the revenue recovery? Thanks.
Yeah, I think you're talking about the third quarter gross margins. Whenever there's a big jump up in utilization quarter over quarter, there will be a negative hit on gross margins. It's called the inventory revaluation. I believe we mentioned about this some time ago. So as you can imagine, the utilization in third quarter is much higher than that in the second quarter. And therefore, there is an element of negative inventory valuation happen in the third quarter. The amount is slightly over 1 percentage point. Okay. Now, if utilization remains similar level, that factor will not happen.
Okay, but when we're looking at the first quarter gross margin guidance, I know the high end we reached the 50%, but it still looks like the is ranging between the 48 to 50. So I mean, there's still a chance for the company to go back to 50%, but it looks like the midpoint doesn't reach that yet. So I think not just about the 3Q, but also the fourth quarter.
Yeah, as I mentioned earlier, our structural profitability remains the same, i.e., if we reach 90% of utilization, we're targeting 50% of gross margins.
Okay, thank you.
Next question will be coming from Morgan Stanley's Charlie Chan.
Thank you. Congratulations for very strong results. So, sorry, keep coming back to this question. So, since you are raising kind of a long-term Capex outlook, including next year, why don't you just revise up your revenue CAGR assumption? I think 5% to 10% revenue should be too conservative. Can you comment on that part?
It's not about time to change that target. I would say still 5 to 10%, but it's in the upper side.
Okay.
I can say.
All right. Thanks. Yeah, and another way on this capital intensity question is about the payback period, right? Because for me, I still cannot add up why your structural profitability can remain the same, whereas your capital intensity increased so much, right? So in other way, can you just comment about the payback period for your 7 nanometer and 5 nanometer investment? Is that becoming longer going forward?
I remember this topic was discussed the last time, and I think our answer was that we don't look at payback period. We do look at return on invested capital, and from that part, we don't see that big a difference with the advanced technologies.
Okay, thanks. And my next question is about the advanced packaging. I remember in the previous quarters you commented that advanced packaging should outgrow the front-end business. So first of all, is this remains the same trend, and also how about the potential margin dilution from the packaging business?
The forecast on the advanced packaging business, the growth rate is still faster than the silicon growth rate. The wafer's revenues growth rate, it stays the same. Okay, still that statement still valid. The gross margin, that's another consideration. The gross margin of the back-end business actually is lower today, still lower than the wafer margin. But we look at it whether it's a good business to go or not on two factors. One, we really want to support our customer to improve their system performance. So we have to do it because of TSMC is the only one company right now can support customers' advanced packaging. Second, actually, is the Capex intensity on the back end, and that's advanced packaging business, is smaller. And so asset turnover is better. So put all in all together, we still think it's a very good business to pursue.
Yeah, and last one, this is a quick one, maybe for CFO. Because you revised up your Capex, right? So what is the free cash flow trend in the coming quarters? I guess we want to know the next potential quarterly dividend hike. What would be the timing?
Let me just answer it by saying that we will not lower our dividends quarter-on-quarter basis. So investor will get at least the same amount, if not more, compared to previous quarter or compared to previous year.
How about the base? I mean, the free cash flow projection. Do you have the number for coming quarters?
Yes, we do. But I don't think that really matters to your questions.
Okay, thanks.
If I may, I would like to remind Charlie that today all our shareholders are getting the $2 per share dividends today going into their bank account. And we have already announced that the next quarterly dividends is going to be $2.50. So it has already gone up. Next question will be coming from Goldman Sachs' Bruce Lu.
Can I ask, what is your 5G penetration forecast about 6 months ago? 5G smartphone penetration forecast 6 months ago.
Oh, 6 months ago, we don't think the 5G smartphone will be any significant amount for this year. And so it's...
No, I mean, 6 months ago, what's your forecast for 5G smartphone shipment in 2020?
Oh, single digit.
So basically, you increased from single digit to mid-teens.
Yes.
For the past 6 months.
Yes.
Can you tell us what's the rationale behind your changes? Because for the past 6 months, we still have a lot of concern for the 5G smartphone, such as NSA, SA, the specs not finalized, the cost structure is getting a lot higher. Global telcos, they are not as aggressive. So can you, because from single digit to mid-teens, which is a big changes?
It's a big change. And all I can say is whether it's NSA, SA, or those kind of 5G base stations installation, we work with our customer, actually. We listen to them. And they also have their own customer to consider. And so some of the area in the world, they accelerated the 5G's deployment. And that's why it resulted, as compared with 6 months ago, we did not see this momentum. But then in these 6 months, the momentum is going bigger and bigger. And so that's why I cannot give you the specific number of which country or which region, but we did see the momentum continue to grow. And now our own estimate had almost doubled.
But the concern is still there from a lot of investors, such as the NSA or SA, because you still cannot see the clear indication from, at the end of the day, from the telcos, right? So that's why we are a bit surprised to see this kind of meaningful changes, right?
Yeah, I have no way to comment on the carrier, how they think about this kind of 5G deployment, but they are moving ahead, and for the 5G applications, especially in some of the big countries, and that's what we see.
Okay, my next question is that we always rely on management to comment about the fabless inventories. You always talk about it. But moving forward, your top 2 customer, it might account for 30-40% of your business pretty soon. And they might account for 70-80% of your advanced geometry. And they don't really report their inventory anyway. So how, can you give us something, some other indicator for us to judge the industry growth or judge the inventory level for the industry?
Judge for the industry level, the fabless company is still one of the big factors that we consider. As for my customer, actually, for TSMC, the more importantly, we really work with our customer closely. So I'm not going to give you the exact number of my big customers' inventory, but we work with them. Believe me, we very closely work together, so we understand that their strategy and their inventory.
That's why I want you to give us some hint, right? You know, we cannot just tell my investor that we have to trust TSMC, even though I say that all the time. But
you can trust TSMC, no doubt about it.
Thank you.
All right, I think this is probably about the right time that we go to the lines for questions. I think there are quite a few analysts waiting on the line for questions. So operator, could you please go to the first person on the line? Thank you.
Yes, we have questions from Brett Simpson from Elite Research. Please ask your question.
Yeah, thanks very much, Elizabeth. I have a question really on China. I guess in the last couple of years, we've seen the business double with Chinese customers. And I guess at the moment, it's pretty clear you're going through a very healthy inflection point with Chinese customers at the moment. So can you talk about how you see this part of your business evolving over the next 1 or 2 years? And then, I guess from a planning perspective, are you concerned that the rise of your China business comes at the sacrifice of other customers, particularly U.S. companies? Thanks so much.
Brett, your question is with respect to the business we derive from China. As you have observed that our business has doubled in the last couple of years from China, and you like to see the outlook for our business in China in the next 1 to 2 years, and also the strong growth coming from China, whether it is coming at the expense of our other customers in other regions.
Well, we did see the strong growth from China because that's a very big market, especially in the semiconductor area. And we are happy to see that growth. And TSMC is offering the most leading edge technology to support our customer in China. And so to be exact, we are going to grow with the China market. At the expense of other customer, the answer is no, because we support all the customer with all our strengths and our capacity.
Okay. And maybe just to follow up on 5 nanometers specifically, I guess maybe you can talk about whether you think the ramp of 5 nanometer will be similar to prior nodes in wafer times or revenue. How should we think about the ramp up, particularly as we get through into the second half of 2020? And on your Capex increase, I think you said in the past, you plan to grow, you've been quite consistent, you want to grow your top line 5 to 10%, but your capital intensity to support that growth would be around about 30, maybe low 30s as a percent of sales. Now you're stepping up your capital intensity significantly, but you're not changing your growth outlook. Can you perhaps just explain the thinking there? Thank you.
So, first part of the question is with respect to 5 nanometer ramp, whether the ramp profile next year will be similar to our prior nodes ramp profile. The second question is related to the substantial increase in the Capex, because in the past, TSMC has indeed said that we could have $10 to $12 billion Capex to support a 5 to 10% CAGR. Now our Capex is substantially higher than the 10 to 12 billion. And therefore, does that mean that it's going to support a much higher CAGR on the revenue growth?
Well, let me answer the first question first. The 5 nanometers ramp for next year, certainly, as compared with 6 months ago, we are right now is more aggressive and more optimistic about it. And hopefully, because we spend a big money, hopefully that it will ramp up much, in terms of revenue, will be much faster than 7 nanometer. In next January, we are going to talk about more. And so that also answers the second question that we increased the Capex quite a lot, of course, from 10 to 11 billion to about 14 to 15 billion. With that money we spent to buy the tools, to prepare everything, we do expect that our growth is what go beyond 5 to 10%. But right now we are not ready to change the long-term 5 years target yet. However, we are working on that.
Thank you very much.
Operator, please go to the next caller on the line. Thank you.
Yes, your next question comes from the line of Mehdi Hosseini from SIG. Please ask your question.
Yes, thank you for the opportunity to ask a question. A couple of follow-ups. When you make a reference to 5G, how should we think about opportunities from the networking, specifically base station? Thanks for the detailed color on the smartphone units. You expect mid-teen penetration. But how would you quantify opportunities from the networking, specifically base station? And I have a couple of follow-ups.
So, Mehdi, your question is that although we have talked about 5G smartphone units for next year, but you would like for our management to talk about the 5G base station business next year.
Actually, the networking is fundamental for the 5G's infrastructure. And because of it's a shorter wavelength, so that you can expect that the base station will be much more than 4G's base station on the SA or even for the NSA's implement. So we expect the networking processor will be much higher. The opportunity will dramatically increase. Exactly for the number, we don't have an exact number for right now.
Is networking included in the HPC category?
Yes.
Okay, so the reason I ask this question is, let's say if your customers are building too many 5G smartphones, could opportunities in networking actually help offset any downside risk to excess inventory built on a smartphone?
I think, Mehdi, you are asking whether or not the increasing demand in the networking side will offset the higher inventory or the inventory correction on the smartphone side. Is that your question?
Yes, if there is an inventory, I'm trying to better understand how networking could offset any risk of inventory build.
I did not catch what you said, the relation between the networking or the base stations set up with the 5G smartphones inventory.
Sure. Let me clarify. I think one of the concern among investment community is, yes, there is a very strong build plan for the 5G smartphone, but the risk is these phones are too expensive, and perhaps there is a risk that your customers' build plan are too aggressive. In that context, could opportunities on the networking side be large enough for TSMC to help alleviate any downside risk on the phone, or on the phone side?
Okay, let me repeat your questions. You say that my customer are making the smartphone quite a large number. If the base station or networking did not catch up, is that the smartphone going to be inventory? The answer is no, because of the 5G's application will be implemented, and you bought a 5G smartphone, it still can use the 4G's functionality, by the way. So it won't be a kind of an inventory as you mentioned about it, provided if there's not enough 5G's base station.
So Mehdi, I think what CC is saying is that you don't have to worry too much about 5G smartphone inventory because there will be sufficient demand to take up those products.
Yes, thank you. And then just a very quick follow-up. In the past, you have talked about advanced packaging accounting for high single-digit of the overall revenue in 2019, and that mix would go into the teens in the next decade. Are those targets remain intact?
Advanced packaging used to account for about high single-digit % of TSMC's revenue. Mehdi's question is, will that continue to increase to maybe high teens of TSMC's revenue?
It will continue to increase, but it's not a high teens. It's still the high single-digit, but the growth rate is higher than the silicon wafers growth rate.
Okay, thank you. And then, is cryptocurrency stable? Should we be concerned that maybe some of these growth is driven by crypto? Or do you see crypto as pretty stable and with minimum downside risk?
All right, you are talking about cryptocurrencies and mining. We did see the Bitcoin's prices increase starting from this year until now. However, let me state the TSMC's policy and strategy. We will support cryptocurrency mining business with available capacity. That's all we said. We are not going to add more Capex for that.
Great, thanks so much for answering the questions.
Thank you. Operator, could you please go to the next caller on the line? Thank you.
Your next question comes from the line of Sanwon Ayer from Consider. Please ask your question.
Yeah, hi. Thank you for the opportunity. I just wanted to understand, given the recent developments that are happening in Hong Kong and the elections that we're heading in Taiwan next calendar year, do you see that we might have to revisit the Capex plan given the trade wars and the intensity of the trade wars that are increasing?
You think about the trade war between the two big countries, is that going to affect the TSMC's Capex plan?
Yes, in terms of...
In terms of Hong Kong situation, or what do you think about it? Let me say again, TSMC build capacity working closely with customers to meet customers' demand and our own judgment. We did not put that kind of trade tension, in the world into consideration. Although we think that any trade tension or trade war between any countries will have a negative impact to the semiconductor industry. Did I answer your question?
Right, but so hypothetically, if you were to assume that if the election that comes in, presidential election in January, if things were to go towards a party that's in more favor of the one state kind of a thing, would that have an incremental impact in terms of how the trade war is seen from TSMC's perspective?
No, we don't think so. Even we have a general election in the next January, that won't affect the TSMC's strategy. Because of we do the business according to the demand, according to the market situation, and have very little impact from the politics in Taiwan. Did I answer the question?
Good to hear that. And so finally, yes, to a large extent, yes, that was helpful. And one more thing, sir, in terms of the 5G Capex that we have been talking about, so there have been on the high-speed FCC segment, there have been delays in terms of the chips at the next node coming through from your large customers. When you see that 5G rollout will be pretty strong and also the FCC side things will pick up strongly, is there any indication from your customers that the launch on the next node is going to be pretty soon? What gives us the visibility here?
Let me try to see if I understand your question. You are asking us about the visibility of our customers' demand for our next node technology. How much visibility we have with respect to seeing the demand from them for the next node.
Oh, next node you are mentioning about the 5 nanometer and 3 nanometer?
5 nanometer for now.
Or let's say 5 nanometer. Judging from we increase the Capex for the 5 nanometer, our position and our forecast on the 5 nanometers of business. So it will be good, and I cannot tell you how many percentage more, but I think the 5 nanometer TSMC is going to do a very good job and going to have a high market share.
Great. Thanks a lot, sir.
Thank you. Operator, let's move to the next caller on the line.
Your next question comes from the line of Shushi Ju from S&P Global. Please ask your question.
Hi, thank you for taking my questions. I just have a brief question follow-up on the China issue. I was wondering, is there any change in numbers of your Chinese clients in recent years, especially in this year? And if it is possible that we can get a specific number of the Chinese customers or the percentage of the Chinese customers as of the total clients. Thank you.
The number of customers in China actually is more than 100. So it changes some of them changes all the time. Of course, there are some bigger ones and smaller ones. I'm not sure if this is your question.
Yeah, sure. Just, is there any change of this number in this year?
The number of customers generally increases.
It increases. And may we know the portion of the Chinese customers in terms of your overall customers or the percentage?
Oh, you mean the revenue or number of customers?
The number of customers.
Oh, we have over 400 active customers globally. And if you look at the China, if it's somewhere over 100, that gives you an idea. Does that answer your question?
Yes. Great, thanks. Very helpful. Yeah, that's all my questions. Thanks.
Okay, thank you. Do we have any questions on the floor? Okay, let me come back to the floor. First of all, we'll have a follow-up question from Citigroup's Roland Xu.
Thank you. I would like to follow up on the inventory question. However, this is for your own inventory. I look at in 3Q, your inventory level actually have been decreased to 97 billion. Even though we had a very strong revenue in 3Q and a very upbeat guidance in 4Q. So the wafer in process, I think should increase. However, overall inventory decreased a lot. So does that mean our finished goods and also even for our materials like a wafer, inventory can be decreased a lot?
And you are right. Actually, let me. It's supposed that the process actually enlarged, so the inventory should increase, but it's decreasing. It's because of some of the wafer we work with our customer at the beginning of this year. We produce it in early stage to make sure that we don't have a wafer coated at the end of this year, and then we ship it out. And so the inventory actually decreased quite a lot because of that.
Means finished good?
Yes, finished good.
Now, how about for the wafers? I mean, for the raw wafer inventory?
The raw wafer almost stays the same because we prepare, our TSMC's business is increasing. So actually the raw wafer, we require a lot of amount in preparation for the good business. So it stays the same in terms of percentage, in terms of days, I'm sorry.
Okay, and for the very upbeat outlook next year for this 7nm and 5nm, are we securing all of these wafers for our production next year?
You bet.
Okay, thank you. Okay, and the second question is, you announced that your EUV tools have been reached production maturity, but how about for the infrastructure? Means for other components like photoresist, pellicle, photo mask, or even for this inspection tool, chemical and materials. So yes, we are going to have very fast ramp on 5nm because of very strong demand from customer. But are there any gating items for this EUV infrastructure will be potentially a risk?
So far, we did not see any gating item. All the infrastructure actually TSMC is well prepared. We have produced our own pellicle. We have a large number of masking capacity and everything. So even photoresist, those kind of things, we have been taken into account. So we are ready for actually we are in a high volume production for the EUV lithography technology. For next year, it will be even higher volume, and I can assure you that we are all prepared.
Next question will be coming from Credit Suisse, Randy Abrams.
Okay. Yes, thank you. I want to ask, because you kind of hinted the utilization still below 90%. So to get to 50, you need to get utilization up. Could you talk about the 28 node prospects, how you see that? And then also 16 and 12, some of the applications likely move on, some of the mobile and graphics. So your view on utilization and backfill to hold up that technology node?
Let me answer that question. On 28 nanometers, this technology node right now, I believe in the industry is overcapacity. And so the utilization is very low, not to TSMC's expectation. So we prepare a lot of derivative technology, specialty technology, let me say that. And we expect 2 years later from now, it will be again in the high utilization, but not today. It takes time to work with the customer and to utilize the capacity. For 16 and 12 node, today we are still in a very healthy utilization, but we are prepared. And if our competitor is continue to increase the capacity just like a 28 nanometers node, we expect a couple of years later, something like that, you will be over capacity again. So right now we are prepare all the specialty technology like RF, like even some of the ISP or something like that. So it won't happen to TSMC.
Okay, the second question, just to ask about the segment revenue. I think into third quarter, mobile and HPC were both going to be strong. The HPC was good, but it wasn't quite as strong. So I'm curious, just in that mix, maybe factors for HPC. And then IoT was quite strong. So maybe some of the things you're seeing in that. And then if you could extend to give an outlook for fourth quarter by segment.
In the fourth quarter, of course, every segment is an increase. The HPC itself consists of a lot of different market segments, that including network processing, including GPU, including accelerator, including all the cryptocurrency mining. And we expect that HPC will grow significantly in the fourth quarter.
Could you give the other segments? I guess you.
Other segments.
Any lagging and any picking up stronger.
Let me give you okay. The IoT this quarter, the third quarter of the IoT increased quite a bit. So in the fourth quarter, probably it will be level off or slightly decreased, while all other segments will continue to grow.
Great, thank you.
Next question will be coming from UBS, Bill Lu.
Yeah, hi, thank you. If you look at the foundry industry historically, what we typically see is a big node followed by a smaller node, right? And now essentially what you're saying is a big 7 and a big 5. Can you maybe just discuss what you're seeing that is different now versus before? Now, clearly TSMC is addressing new markets. I think the demand drivers are different now versus before, but I'm curious as to what you're seeing that is different now.
You mentioned there's a big and then followed by a small node. I don't really catch what you mean, but let me say that TSMC introduced 16 nanometer and then 12 and then 10 and then 7 and then 5. Now let's talk about 7 and 5. We are looking at the new market in the 5G, because the 5G is a requirement on the speed, on the power consumption reduction is quite a lot. It's not the same experience that we had before. And so that after the 7 nanometer, all the customers ask us to develop the technology to meet their requirement with the higher speed, lower power consumption. So it will be a full node kind of improvement. It's not say that a 10% improvement will be good enough. Now, look at our 7 nanometer. We have a 7 nanometer, we have 5, and then we have a 6 nanometer. So the 6 nanometer being introduced as kind of for second wave product. But the leading waves of product are always at the full node and marching ahead with about 2 years of cadence that we expect.
Next question will be coming from JP Morgan's Gokul.
Thank you. So if we compare the change in expectations in the last 6 months, would you characterize almost all of it as market growth, faster market growth for 5G, HPC, or is there any meaningful change that in your market share expectation for some of your future nodes as well?
Well, compared with 6 months ago, we are a little bit kind of conservative at that time because of our 7 nanometers utilization is quite low. So we become conservative. But then in these 6 months, a lot of things changed. Let me say that first, the 5G's momentum is larger than we expected. The second one is we also at the same time, because our technology offer to the customer, we expand our customers' portfolio. And because of the performance, again, we also expand to new product portfolio. And so now we look at the future, we are more optimistic than 6 months ago, much more.
Any increase in market share that you expect compared to 6 months back?
I can comment on that, but it will be increased, right? If you expect.
Okay. Quickly on the breadth of customers on N5, I think around this time, 1 year or 9 months before N7 ramp up, you were talking about roughly, I think, 50 to 100 tape outs on N7. Could we talk about what is the breadth of number of customers or number of tape outs on N5, and how do you expect that to progress? And I know that number of tape outs is not equal to number of or revenue or wafer volume, but just want to understand the breadth of the customer base.
Well, let me say that tape out is one thing that see that how popular it is, but the more important is the high volumes products are tape out. And right now we have many high volume products that tape out. And that is the main reason why we increase our Capex, high volume. And also, in addition to smartphone, there are more market segment that we enter at the 10.
Okay, just one quick follow-up. If you think about N7 family, N7, N7 plus, N6, is it your expectation that pretty much most of the N7 current customers will eventually end up using N6, N7 plus? Will most of your capacity eventually be EUV enabled for N7 as well, or it will still be some EUV, some still using the current N7?
We still expect some using the EUV, and some still stay in the N7. Because for those customers in the N7, when they in the 2 years cadence, they move to N5 already, so they have no reason to go back to use N6. However, as I said, for the second wave of the product, they're using N6 with the benefit of lower die cost and better performance.
So we should expect eventually majority will be N6.
Yes.
Next follow-up question will be coming from Morgan Stanley's Charlie Chan.
Thank you. So first of all, I want to follow up Bill's question on the future technology. CC, you mentioned that there are lots of benefit from power consumption, from performance, from 5 nanometer, etc. So how about the per transistor cost? Right? I remember some of customers talking about they don't see the benefit from the transistor cost saving going forward. Do you think that is true statements?
I still believe the per transistor cost is decreasing because of right now geometry is smaller and smaller. Although for TSMC we more pay attention to what customer need, right? Because of they need the speed, we give them speed. They need the power, low power consumption, we give them the low power consumption. But higher density is always the one that we are moving into the next generation's technology. Okay. So per transistor wise, I did not do the very detailed calculation, but I still think the per transistor's cost is low.
Okay, thanks. And you also mentioned that for those new tape-out, H3 volume is quite big. Can I interpret in other way, meaning those smaller customers, they cannot really afford those future technology unless they have a very big volume? Is that right thinking?
Not really. I mean, that depends on their product. You know, your last question about the transistors of cost, let me give you some kind of a taste. We improved the logic density by 80%, but I did not charge my customer 80% more. So you know that the per transistor is lower. And again, in the market, I would say that a product to be successful is more important than you really calculate this improvement, this cost, that cost. product has to be competitive in the market. And so that people will give them the price that they deserve. Okay? So now the small customer cannot afford it. Actually, some of the small customer, they are working on the CPU kind of a performance. They need a very high performance technology that they are working with TSMC.
Okay, thanks. And next is on EUV. Right? So over the past 3 years, there were some kind of challenges in terms of power, throughput, pellicle, etc. So now do you see any kind of new issues, new challenge for your EUV, or from now on it's like a blue sky? Thanks.
Okay, in TSMC, EUV lithography technology is now in the production stage. But are we happy with it? Not yet. We are still improving the availability. We have an output power of 250 watts as we expected. Now we can operate the tool with 250 watts consistently. However, there's still something that we need to improve so that we can improve the throughput, we can improve the availability, so we can reduce the cost. We continue to improve.
So in the interest of time, we will just have the last question that will be coming from CLSA's Sebastian Ho.
Thank you. I want to follow up. First one is I want to follow up on EUV, because overnight SML seems to talk about some supply constraints on the EUV tool, the new EUV tool. So it looks like this guidance, preliminary expectation for next year EUV unit growth doesn't seem to be like amazing either. So I wonder what would that impact TSMC? So and has TSMC secured what you need for this 14 to 15 billion CapEx this year and next year?
The answer is yes, we secure whatever we need. We work with the ASML very closely, and we are ordering all the tools that we need.
Okay. So which means the supply constraints could affect someone else, but not us more.
I don't want to comment on that.
Okay. My second question is that on the it looks like this CapEx set up for this year and next year, and when you think about that, in 28 nanometer, we also saw very strong demand. We continue to build the capacity, but then a couple of years later, it enters into the underutilization, overcapacity. Although there's some factors that because of the competition and laggers catching up, but how do you see this risk going forward for 7 and 5? And have you considered that whether there will be strong enough second wave or third wave of the demand to backfill this capacity when your current customers are migrating to 3 or 2 or whatever it is 3 years from now?
To answer your second question first, we do have confidence that a lot of product will fill up TSMC's capacity. Now, a few years later, if you compare with the 28 nanometer to 7 to 5, it's not a good comparison. Because of 7 and 5 with a EUV, that technology barrier is much higher than you can expect from the high-k metal gate. And so they were, anyway, I don't want to comment on my competitor.
Right. Okay. Just last one, promise last one. When we look at the CapEx setup this time, it looks like the company has been staying around like 10 billion CapEx plus minus 1 to 2 billion for a few years right now. And if we go back to look at in 2010, when we walk out of the downturn in 2009, and also there's a huge step up of your CapEx from 2010 to 2009 to 2010, and then we know what happened to TSMC. It's a golden era for TSMC for a couple of years. So now we have another step up out of the semi-downturn in the past 12 months. Do you think this similarity now versus then, and when you make this the bold CapEx decision this time?
I know what you ask, but let me say that TSMC is getting smarter. Definitely. And By the way, the technology barrier is much higher than, as I said, much higher than 28 nanometer. So we have a confidence that the capacity we build is a result we closely work with our customer. And so we decide to increase the capacity at this time with a lot of detailed analysis. And I certainly have a confidence that we won't repeat the same kind of error that we did.
No, actually not means error. I would say that was a very right and bold decision happened in 2010. And then
2010, yes,
I was
sorry,
2010.
I'm sorry. Yeah, those are the 28 nanometers, the golden years. Very good.
Yes, so I was asking whether we could see another few golden years after this.
Oh, you say that of course. What do you expect?
Good, thank you.
Yeah, well, before we conclude our conference, ladies and gentlemen, I would like to announce that important news that the beautiful lady sitting right beside me, Elizabeth, had decided to retire from the company at the end of this year. As you all know, Elizabeth has been with TSMC as a head of investor relations for 17 years. 17, that's a long time, isn't it? She is also the head of our public relations for 10 years. And, well, the beautiful lady has been called in the public, say, the face of TSMC. TSMC is beautiful also. In her IR role, Elizabeth has won numerous awards and recognitions all over the world, as the best IR officer. That's in Taiwan, in Asia, and in the world. So many of you have been in frequent contact with her, I believe. So you know that she is a brilliant and enthusiastic and energetic lady, and you can definitely sense how much she loves TSMC. In the last many years, she has built a world-class IR team and developed successfully a competent successor who is sitting right there. On behalf of TSMC, I would like to thank her for all her dedication and contribution to the company's success and wish her the best for her retirement. Now, ladies and gentlemen, let's ask Elizabeth to give us a few words.
Thank you, and thank you very much, CC. I'm very privileged to have been able to work for TSMC in the last almost 17 years. Under the leadership of our founder, Dr. Morris Chang, and the current management team, I have witnessed how this company is able to move from strength to strength and still remains true to its mission and its value. I have been blessed with the opportunity to represent this company that I deeply admire in front of the investment community and the press. I have enjoyed every minute of it, and I hope I have served the company well.
You did.
With all my heart, to the investors, to the analysts, and to the press, I want to thank you for your friendship and trust. I very much enjoyed our interactions, communications, and discussions in the past, and I do hope that you will extend your goodwill to my IR successor, Jeff Su, who has been working closely with me in the last 4 years, and many of you are already familiar with Jeff. I have had the most wonderful, exciting, and rewarding time in my career at TSMC. I'm leaving the company at a time when its future is brighter than ever. And I'm confident that you will continue to derive handsome returns from owning our shares. So with that, let me wish you good fortune and good health, and we will conclude today's conference here.
Thank you.
Yeah, exactly. So
Yeah.
you are
Yeah.
and companies do.
Okay.
All right.
easing into CCs, easing into this
Not
a
problem. Now you
more and more like here and there.
So you're through December 31.
Yeah, it will be end of this year. So still 2.5 months. For the next month, 1 month or so, will be intensively traveling. And then I also have to more so this is going to be really busy 1 month. And then I'm which is 17 years of things piled up, which is going to be difficult. Yeah, yeah. So any question you can still shoot me.
Hey, there's one thing. What, is anything happening?
Packaging is very low. This year we only spent a few $100 million for packaging. And the increase, the $4 billion increase, is not related to packaging at all. Like I said, about $1.5 billion is for selling, and $2.5 billion is for Well, I told you, there are both EUV and non-EUV. Because the non-EUV setting, the N70 is still very strong. But we still need to accommodate that. And then, of course, the EUV ones. But gradually, I think, the CC set a few years down the road, majority will move to N6, which is the EUV. But even for the lithography, the immersion lithography that it will still be used for M5. Because M5, there will still be a lot of layers that will not be used. So, to go back to this to add inside of it. But we understand that there could be a risk that we can also cover. So we have this is why just put the wall but there might Right. Today we did not explain that, and I'd like to explain because every year we have a depreciation of this year, the next year, these amounts are so even if we do have increases in CapEx, but our depreciation this year did in fact because of a sizable increase in the so-called, we call it over depreciation, but it's basically depreciation. So that helped to offset the increases in depreciation. The next year, the depreciation is still sizable, despite that we still have a sizable amount there because of this year and next year's CapEx. But we'll wait till Wendell to give you, because these things can still change. Even if you have the overall capex number remain similar, but the profile, do you spend it front-ended or back-ended, that can change your depreciation. Well, 28 per se is marginally negative, but since you do less 28, it hurts, right? Because you do less of a more comparable solution. So I think that is what it is. But I wouldn't say it is a meaningful drag. I think what is really important is still the new nodes drag. M5 unfortunately, 7nm starting this quarter is margin negative. And so it will remain margin negative. So that's the big part. We will do less VAs of that. But I think the drag is maybe how successful, not so successful already. And you mentioned this gross margin, which I think is a very fair question. Even if Wendell continue to stress that we will indeed still keep our structural profitability above 50% gross margin, this is really about that, and also because new technologies will and so I think if we're able to keep about 50% gross margin going forward at about 100% utilization rate, this is already very good. I mean, how much more room can we go on? It really depends. Also depends on production of the 7 and 5, certain wave applications coming in, and it also depends on whether or not we have a very good competition to try to destroy us. So you have to take that into consideration. But as CC said, the capable players will need to learn these chess. It's not an issue of money. It's really just an issue of well, I think sooner or later they also have to recognize that they are in there to make profit. Right. And so I think, we'll see. I think there's still some reasons for us to be reasonably optimistic because we have a very strong position. Even if they have another offer, we still have a vigilance of our expense. And so that I think will then recently we heard that it wasn't doing very well with 7nm production and reliability and stuff like that. And that only shows how difficult that technology is. And so I think we are able to execute it's really a remarkable thing that will continue. So, yeah.
Also, I see you started talking about even
Also, I see is targeted for HPC applications because it's chiplets, basically. It's multiple chips packaged in very close proximity. That's multiple chiplets. Volume wouldn't be too huge at the beginning because it's still not a commodity solution. It's like custom-made solution. And so I think we'll go from there. I think the key thing is to demonstrate that we are able to do that. So demonstrate is really important. Ramp is 2021. So still about 2 years. I think we'll most likely do more than $3 billion back-end business next year. So you will be able to grow reasonably well. Structurally, back-end growth rate will be higher, faster than the wafer growth. But next year, with macro holds, it's going to be fantastic. Then in that regard, I'm not sure if I can say our backend will grow faster than that rate. That I can't tell you. But structurally, I think that's good. I also felt that today several of your questions also quite legitimate in our management answer. Is that we keep on saying that $10–12 billion to support 5 to 10% growth. Now we're talking about $14–15 billion. Should we be able to support a higher growth. And I think the management answer was like, oh yeah, next year is going to be higher growth. But you guys are asking a structural issue. And so far, CC is only willing to commit to the upper end. But I think these things are difficult to predict. The important thing is that our position in the industry is good. I think I really think about the world in the future. Recently, there was an economist issue that talks about chips and everything. I mean, this is really a new world. Doing so many things that we're asking to business model, it could be ethics issues, it could be business model issues, all that sort of things. I think we are on the cusp of something quite different. And they say silicon for us in the future is like electricity. So it's really going to be very different. So I don't want to sort of bog down to the 5 to 10% or 10 to 15, but I think that the new economy, the new world, silicon plays an extremely important role in TSMC plays an extremely important role in that and that will make us indispensable. And it will make us and if that happens, our multiples will go to 20 times. Yeah, I think, so they're not just the earnings growth, they're like really from because of that critical, indispensable role. 是没有第三季是起来，第四季是下去。对，其实很大的原因是 Wearables。IoT 里面很大一块叫 Bluetooth， 其实就是 Wearables。Parts watch。很大一块是 Wearables。他们要反馈一下。It's just like before. Yeah. Very similar to so very Thank you so much.
OK， 都让我们吓了一跳。真的一个超震撼弹呢。接下来的计划是什么呢？
没有什么计划，其实没有很震撼啦。其实我打算退休这件事情其实是规划了一阵子，所以你知道吗？我也找了接班人，也有很多的训练哈。那我想这会是一个非常 orderly 的 transition。至于说退休以后要做什么啊，我其实还没有时间去多想。我想最重要应该就是跟家人的时间要多一点，然后把身体锻炼好一点，因为这个。退休以后，你还是希望有一个健康的身体，才可以去做一些其他的事情嘛啊。那至于什么叫其他的事情，我想我其实是一个蛮多兴趣的人。那过去因为工作的关系，很多兴趣就先放到旁边了。那我想退休以后就会有点时间做一点自己有兴趣的事，那跟家人的时间多一点，跟朋友的时间多一点，啊，做一点跟以前比较不一样的事情。
你在台积电大概多长一段时间？那要离开会不会是因为 Morris 也离开？
不是，因为年纪到。其实我在台积快17年，那这17年听起来很长，其实对我来讲好像就是昨天一样。我还非常清楚地记得我第一天到台积电上班，2003年的3月10号。我记得我第一天到台积电上班，从停车场出来，走在路上，就跟着很多工程师一起搭电梯啊，一起进办公室。那时候我们还是在25厂，不是像现在的12厂。那时候我就在想说我来到一个世界第一流工程师的所在地啊。那时候心里非常非常的兴奋，那个感觉我到今天还非常的印象鲜明。 所以快17年的时间就像昨天一样，那每一天都过得很充实。那我想大家都知道台积是一个非常好的公司嘛，那我讲很好的公司，当然创办人非常非常的重要，我们的 management 非常非常重要，还有我们的员工。台积电有全世界最优良的员工，诚恳、踏实、勤朴啊！我记得我刚来的时候，大家都说啊，你一个女生就是财务背景，跑到一个那么多男生又是工程背景的地方，你会不会适应不良啊？我觉得一点都不会，我觉得非常愉快，就是跟这些人在一起工作非常愉快。那在台积这么多年，从来不需要有一点时间浪费去想公司有没有 politics， 你说话是不是要担心得罪谁，都不用，你就是很 be truthful 啊，凡是为公司着想。那你会发现在你旁边工作的人也都是这样子，凡是为公司着想，所以那个团队合作的精神和那种气氛是非常的好。这个是我最 enjoy 在台积电工作，就是一个很诚恳、朴实、很扎实的、很善良，而且又很善良的一个公司。
谢谢孙博士，但我们还是想要了解一下，就是像刚才我们就是Cici在台上也讲过，像接下来这个5G会是一个大爆发的一个时机，那怎么看接下来第4季我们台积的表现会怎么样？
其实第4季台积，我们刚刚财务长也给了 guidance 嘛，那大概从第3季这么好的一个基础上面来讲，我们大概继续还可以 grow 大约9%，所以其实是蛮好的。那我想不只是第4季会很好，我想明年甚至未来几年，台积电都会是表现很好的一个公司。5G 的出来，人工智慧的出来，它其实是会改写整个人类很多生活的方式。那在这个情况之下，这个半导体会是我们生活里面非常重要、不可或缺的一个基础。那台积电在半导体产业里面是 play 一个非常 critical、非常重要、不可或缺的角色。所以我相信我们的未来，公司的未来会越来越好。
谢谢孙博士，
谢谢你们，谢谢。
确定很久，这什么时候确定最后一步？
当然，董事长、创办人在的时候，当然不敢讲，
想到心里不敢讲。
我不会告诉你，年纪是他们18岁了，才18岁，对，18岁 ，wherever 没有，我是这样想啊，我觉得一代要有每一代都有人才，台积其实是有人才的，我们用了很大的一个办事，那我们这些人老坐在那个位置上，新人怎么上来啊？对不对？你就让位置让新人上来嘛。对啊，
你为什么要打电话给谁啊？
我跟你讲哈，你不要看过，我们财务长，你知道吗？他其实我也有吗？我有看。
OK， 跟你一样就好。
刚被拒绝了。真的？请他建设一下那个心理建设一下，请他给我看。
真的，没关系嘛。那你们都认识 Baker 啊，都认识 Michael。那其实有重要的问题 ，Baker、Michael 都可以handle，甚至他们知道，如果他们不能handle，一定会 escalate 到window里面去，所以你一定不用担心，一定不用担心，真的呀，所以不用担心。In good hands，
谢谢，
谢谢你，
谢谢。
我可以跟你拍张照。
谢谢。
1、2、3。开始。1、2、3。
谢谢。来，我要给你。
谢谢。
哦，对。
3、2、1。好，一样很忙这个。3、2、1。OK， 好，
我也要跟博士拍。
好，我也要给 Baker 拍。
我可以帮你拍3、2、1。你需要很。
再上好吧。
3、2、1。
谢谢。
谢谢。
不笑啊！半身吗？
好，谢谢你，谢谢。
你也要拍一张？哦。
一起，我就没有这样子。
发现我们。